Fresh Fed speak, this time from Collins. Let's get to Steve Leisman. Hey, Steve.
Hey, thanks, Carl. Boston Fed President Susan Collins saying the Fed may be at or near a point where it can pause hiking interest rates. She says the Fed can assess the impact of prior hikes and the tightening of credit standards from banks during such a pause. She says there's some promising signs that inflation is moderating, and stresses in the banking system are going to further tighten credit conditions and perhaps bring down inflation as well. But she does say decisions should be made meeting by meeting. In the minutes yesterday, we learned from that May meeting that some officials saw a need for additional rate hikes due to slow progress in bringing down inflation. Now, in official Fed speak, that some is more than several participants who said they did not see a need for further hikes. Of course, Sarah, the Fed speak is different from the English language, where it's the reverse and several is more than some. Sarah?
Exactly. I can relate to that. So interesting, there's a lot of ways of looking at this, Steve, but the rate on swap contract linked to the July meeting, I noticed this morning, 5.34%. So if you take that from where we are right now at the current Fed funds rate of about 5.08%, that implies the market's starting to price in 25 basis points sometime between now and July.
Right. So I have basically, Sarah, I'm actually meant to write an internal memo on this. I've basically stopped reporting some of these probabilities. In fact, I can give you even more than what you're talking about to just kind of say what's going on. It's a 45% chance now, or a 40% chance of a hike in the June meeting, and call it almost a 60% chance of a hike by July. What's happening, Sarah, is that you have this surge in rates that are linked to the concerns about the default. And so the 1, 3, 6 month T-bills are all much higher in yields, and that bleeds over, actually pulls over the Fed funds contract. So we're not getting a read there, I think, of what the market believes the Fed is going to do. It may be up, it may be elevated, but really what it's doing is it's following this rise in yields, this ridiculous rise in yields relative. You don't see it there with the 2, 5, and 10, but you would see it if you had the 1 month, 3 month, 6 months, which are all up in those ranges. And so that's what's pulling up the outlook for the Fed funds. I don't believe that's where the market is priced right now.
I know, that's really good.
Priced